think silver is a steal right now. Hashtag triple digit silver. That's what we're going to look at today. Is triple digit silver really realistic? Well, I think so, and that's what we'll look at today. Yeah, it's something that should be happening, in my opinion, if you look back through history at the gold-silver ratio.
The gold to silver ratio currently stands at 88.88, a level that historically signals silver is undervalued. Generally, silver is considered very cheap when the ratio is above 80, while gold becomes the better buy when the ratio drops below 50. While some analysts, such as Mario Innecco, believe the ratio could eventually return to its historical average of 15 to 1, we view this as unlikely in the foreseeable future. A more realistic target is the mid-range of 40 to 1 to 50 to 1, which aligns with the standard deviation of the past 25 years. At these levels, silver presents an attractive opportunity, especially given its rising industrial demand and constrained supply. With applications in solar energy, electronics, and electric vehicles, silver is essential for the rapidly growing green energy sector. For those looking to take advantage of these dynamics, we've created the Stacker's Handbook. This comprehensive guide teaches you how to trade the gold to silver ratio effectively using sound statistical methods and an easy to follow system. It's designed for both new and experienced investors who want to systematically build their wealth by understanding when to favor silver or gold based on the ratio's fluctuations. Our guide emphasizes a balanced, data-driven framework for stacking, helping you maximize your ounces without relying on fiat conversions or market commentary. Check it out at goldsilverstacks.com. Additionally, to celebrate democracy's recent victory in America, we're running a 30% off sale at goldsilvermerch.com until the end of the month. We've just introduced price point t-shirts and new designs, so this is the perfect time to get your gear and support the local economy as well. Use the code PRESIDENT at checkout to claim your discount. Enjoy the episode.
Some charts about the gold-silver ratio and other charts as well, but this is the one that really is amazing. It's a 3,500 year chart, and you can see that up until the late 1800s, the price of the gold silver ratio was averaged around 15 roughly for over 3,000 years, and since the late 1800s or around 1870, that's all changed. So this is an aberration here, and I think it's not going to last forever because we are at a point where the supply of silver is dwindling. The fact that silver is so cheap, we're almost at 89, the gold-silver ratio right now, makes it uneconomic to recycle silver. So the only way to replenish the supply of silver, be it for industrial use or investment monetary use, is for the price to go higher. And I think, as this says here, hashtag triple digit silver is very much a possibility. Yes, Andy gave that to me. It's from Miles Franklin. And so where do I think silver could go, or where should it be? Let's look at where it should be, looking back 3,500 years and an average of 15 to 1 in the ratio. Well, it's very simple. You take the price of gold, 2,700 or thereabouts, and you get $180 silver. So triple digit silver is, in my opinion, a possibility. And I've spoken, of course, a few times in the last few months to David Jensen, who does great research about the LBMA in London. And I think the LBMA, the London Bullion Market Association, is the key to the silver price suppression. Yes, COMEX is part of it as well, but it's in London where the bullion banks are able to rehypothecate or create an endless supply of silver, which is, in my opinion, fraudulent. But how do they get away with it? Well, David Jensen explained that with the Big Bang in 1986, that was when the Thatcher government deregulated the financial system in the City of London, and it led to a huge growth in the City of London. I benefited from the Big Bang. I came here in 1992 and I worked in the financial markets. But the Big Bang, they gave the bullion banks basically carte blanche. They made it so that they would self-regulate. So there is no regulation. It's just like a Wild West, the London Bullion Market Association. And the Bank of England just turns a blind eye to it. Yes, the Bank of England is part of this LBMA mechanism, even though they don't officially belong to the LBMA. The physical silver is kept. A lot of it is kept in London.
In today's news recap, silver won't lose its luster long term despite economic headwinds, Bank of America says. Silver prices could see headwinds in the near term due to broader economic uncertainty, although the metal has received support from global consumption outpacing supply, according to analysts at Bank of America. A stronger U.S. dollar and weak industrial activity has placed pressure on silver recently. While President-elect Donald Trump's plans to impose strict import tariffs on Canada and Mexico, key suppliers of the metal to the U.S., have threatened to dislocate silver markets, the analyst said in a note to clients. However, silver's price has hovered at around $30 an ounce over the past 9 months. The analysts led by Michael Widmer argued that, in their view, this resilience has been tied to consistent silver market deficits, with limited mine production growth, a key source of price support in particular. Global consumption of silver outpaced production of the metal in both 2022 and 2023 and is expected to have done so yet again in 2024, research from Bank of America found. They estimated that over 37,000 tons of silver will be consumer this year, down by 0.4% from the projected amount in 2024, while output is seen edging up by 3.5% to 33,000 tons. Despite the change, the silver market would remain in deficit, a trend the analysts anticipated will continue into 2026. The silver market has been in deficit for a while now, and those shortfalls finally count, the analysts wrote. They noted that this support has been mirrored in some regions, with silver trading at a premium in India and consumers in China having to pay up to source ounces. As a result, silver has solid fundamentals, adding that they are constructive further out on the metal. Silver won't lose its luster long term, they said. Now we'll show you the best clips from the latest interview. But first, subscribe, and turn on notifications so you don't miss our daily recaps. Also, check out our NordVPN deal. It's the fastest and most reliable VPN on the market. If you're a stacker, this is a perfect fit for you because safeguarding your internet data from government surveillance will be crucial moving forward. For a small cash outlay, you can ensure you're protected from prying eyes. Check the link in the pinned comment and get 3 free months today.
When is it going to happen? Well, some of you might say, well, it could take another 10, 20 years. That's true. But in terms of risk reward, I think there's very little risk on the downside for silver. And I've been stacking silver for over 20 years, and I don't have any regrets because when I started stacking silver, we were around $4 or $5, just above £3, and now we're at 25 pounds an ounce. We're almost at an all-time high in pounds. I think it recently also made a new all-time high in Canadian dollars. Gold is making new all-time highs in pounds, for example. And I think it's only a matter of time that the dollar will follow suit. The dollar has been strong versus the other fiat currencies. And that's the problem of the fiat currency system, where the currencies are not backed by anything. Countries will cheat. One country will print more than the other, and then the other country will see that their exports are getting more expensive, so they'll print more. It's like a race to the bottom. And I think the only way really for all these countries to devalue and not have a war is to do it versus gold and silver. And I think that's the way it's going to go. The potential for silver, I think, is great. And I mean, the other reason I like buying silver is not just because I think it's undervalued, but because it's a beautiful metal. So what's changing things now? Why the possibility, in my opinion, of triple-digit silver? Well, there's a few reasons why. The first big reason is that gold is really leading the way. And usually in a precious metals bull market, silver catches up and even overtakes gold. So that's one of the main reasons. The other one is that with the world becoming more and more divided, with the globalization that we saw from like the early 2000s up until 2020, with that like gone out the door, with the multipolar world, the BRICS challenge, and also the talk of trade wars with the new Trump administration, it's going to get harder and harder to get not just all natural resources, but also especially silver. There's even talk that the Trump administration could put a 10% tariff on silver and gold. That normally should raise the price by 10%. Of course, 10% is not that much in the scheme of things. But the other important point about this multipolar world is that countries like India and China, they are using silver for industrial use, and they're consuming silver in massive amounts. And it will come to a point where all that paper that's created on the LBMA will not suffice. People want the physical, and there will be a point where that it flips, everything flips, and price discovery finally will take place. And that's why I think triple-digit silver is possible. What we've had since the Great Crime of 1873, when the United States demonetized silver, is an aberration, as I showed you on this chart here. Because for the last 3,000 years, the gold to silver ratio, or the price of gold and silver, has been below 20. Right now it's at 89. So it's not normal.
What do you think of today's show? Do you agree with Mario Innecco's perspective that the ratio could eventually return to 15-1? Or do you think a mid-range target like 40-1 to 50-1 is more realistic? Are you bullish on silver's potential in 2025? Or do you see gold holding its ground as the ultimate safe haven asset? Share your thoughts, strategies, or questions in the comments below. We love engaging with this community of stackers and precious metal enthusiasts. If you enjoyed today's episode, don't forget to give it a thumbs up and subscribe to the channel for more in-depth analysis and actionable insights. Hit the bell icon so you never miss a future update. Thank you so much for watching, and as always, stay informed, stay prepared, and keep stacking. We'll see you next time.